Hey there, in this video we're going to go over how to use a triple stochastic trading strategy and how to use multiple stochastics in general to better understand trend and reciprocation inside of said trend. To do this, we're going to use some commonly available free indicators that everyone can play around with and see for themselves. Forward test, back test, see if it's going to work in your own tickers and time frames. And learn how to understand what the market looks like evaluated through stochastics in general, because it will make you a better trader and investor. Before we begin, I'm the Augur of Avon, and this is TQFM Trading Strategies. I trade stocks and options and make videos about it to help you guys become better yourselves and kind of open up your mind to all sorts of different possibilities. With all that being said, we're going to hop right into the chart. Let's start with how to set up the indicators. So you can use 2, 3, 4, or several stochastics at varying lengths to use this sort of methodology. Here, we have the first one set at 10, the second set at 100, and the third set at 300. Chop the market up into 3 different moving averages. We have the stochastic that alternates back and forth on a 10-minute cycle. We have the stochastic that alternates back and forth on the 100-minute cycle. And we have a stochastic that alternates back and forth on a 300-minute cycle. So the way that this works is we can look at the shorter-term stochastic for the individual ups and downs inside of a larger trend. We can go to the next largest stochastic and use it to demonstrate the overall trend up or down. And we can go to a very slow stochastic to look at the strength of that trend relative to others in its local area. So the way that this would work is we see the middle stochastic crossing below the midline, signaling that a downtrend may be forming. And we see it pick up some steam, cross below its lower bound, and hold there for a little while. We see the longer term stochastic follow it. Then we see the short term stochastic pop up with some short term buying. This is where you could take a short trade, like so, and then as it follows down, you see it push one and come up and make another one. And this is where things get really important. We watch it trade around until this point here, where I guess it has it. I guess this point here, somewhere up in here where it breaks the fast stochastic to the bottom. At that point, you adjust your stop to the last high. So you're in it there. So you're in it there. You come out to this next low in your short trend, so you can adjust your stop to break even. And you do get stopped out, but it's no big deal. Let's look at some more. This is a nice trendy one. So we see the stochastic coming down below the 50 and holding there for a little while with some big red bars signaling a downtrend, maybe beginning. And then it comes up to touch the top of the short-term stochastic. We can look down at the very long-term stochastic and see that this is, relative to other trends, has some strength. So we can take a short trade here off this high where it crosses. We can put our stop at the last high and we can wait. It's going to come down, it's going to make the first low, it's going to come up, and it's going to make another low. Each one of these, since this is the last high, don't adjust your stop. And it comes up here, it makes a high, and then you gotta wait a long time for it to get back there. And you probably got stopped out on this one for probably about even. You probably would have adjusted your stop to break even somewhere around here. And that would have taken you out because you're already below it. So let's just grab another one randomly. Let's see, this one's kind of popping up. This one would have stopped you out as well. And this looks like it's going to hit you a lot, and that's sort of what happens, but they're very small. And this is going to be a decent trendy one. We see it breaking above the 50, we see it come down. You see it's not super crazy, but it's something. So we can take a long here, stop down there, see it comes up, makes new highs, bottom, makes new highs, so you can adjust your stop to this low, which happens to be just about break even, and stop you out. Feel free to take profit anytime along the way as well. This is just a way to minimize your risk and trade on the stochastic trend, right? So this is a super trendy one. We see it coming down here, breaking below. We see it come up here, so we can take a short, and that's a long. We can take a short. Let's use this bar, be conservative, or be aggressive and say that we took just for risk reward conservative. This, we go up to the last high. And we watch it come down, boom, and come up, and then come down, boom, again. So we get to adjust our, no, I can't go reverse like that. Okay, so we get to adjust our stop to this right here. It goes down, boom, comes up, comes down, boom, comes up, and then it comes down and hits it here, so it's gone from the top to the bottom down there, so you can adjust your break even to the top there, and it stops you out. So you made some money on that one. And then on the way, I want a guys, it's a very choppy market. I want something, yeah, it's a nice trendy day here. So we can see it down here. I think this is the one I use for the thumbnail. So we can see it come down in here. This is a nice big push here. It pops it up over that. It comes down and catches it here. So you can take a long because it's still holding above there and it's above there, right? Take a long on this. So that's a short. What am I doing? And you take a long on the eye. And then it comes up, hits the top, comes down, hits the bottom. So you can adjust your stop to the bottom there. Then it comes up, hits the top. It comes down, hits the bottom. Same one, same level. It comes up, hits the bottom. It's all the same level. And then it comes up and hits the bottom, so you can adjust your stop. This low there. And then it comes out and stops you out. And you made like $26. And when it doesn't work, you're most of the time getting stopped out at break even. So it's very similar to some ways that I do some things. This one also worked here. So it comes down to here. This is actually kind of happened back up here. Well, this stochastic breaking below there. Use these highs. Comes down here, makes a low, makes a high. So you could use that, I guess, or you could use this. So let's be conservative for demonstration's sake and say we use this. And then it's gonna come down. It makes a low, it makes a high, and then it makes a low. So you adjust your break even to there. And then it comes and stops you out. And then it makes another low. You just stop you out one there. You're gonna get stopped out one way or the other, but the question is, where is it gonna stop you out, right? Is it gonna stop you out like a penny below where you entered, and at the same price you entered, and be on an equal low because the trend gets broken at that point, or is it gonna carry and continue? And you can make this faster if you want faster reciprocations to update your stop quicker. If you want, a more reciprocations inside of a trend, you can make this one faster, or you can make this one slower and make this one faster relative to it. And if you want a better idea, lay of the land, you can use this guy and you can either back him out like wicked far to represent like a daily chart or something, or you can move him in to be almost the same speed as this to kind of give you a sort of oscillator up and down. But it's all sort of preference, and a lot of people do this a lot of different ways. And this is just kind of one way you can do it, and it's something I play around with because just understanding the way that this kind of fractal reciprocates back and forth will give you will teach you a lot about how the market functions in general. Because it's all sorts of trends. Like these are little trends, and these little trends have to be strong for this one to be strong. And then this needs to be strong for this one to be strong. So that's just kind of how the market is. It's just kind of a relay, passing back and forth over time frames. This is one group of people who will buy because they're super aggressive and they see a little short-term bottom, so they're gonna try to buy with stops below that. And if they don't get stopped out and they make money, other people are gonna see that, and then they're going to get on the adoption cycle. If that makes sense. Like these are the first people to buy the iPhone, right? And if the iPhone's great and they love the iPhone, then these guys also buy the iPhone. And if this is great, and both these guys have a great time with the iPhone, then these guys also eventually come and buy the iPhone. And that's what I mean by it's not like an adoption cycle. And that's all the market is just infinite series of adoption cycles playing out on all sorts of time frames. And using multiple stochastics lets you have a very consistent relative way to monitor that and measure that, to trade consistently around that reciprocating fractal. So what are some other things we can see when we take a look at this kind of pattern here, this fractalization? Well, we can also say that if the two longer term ones are trading in the particularly bearish zone down here, there's a lot of selling, then it was probably above average time to take reciprocations counter trend in the shorter term. So this one comes up and hits the top, we see these two are still down at the bottom. So there's above average chance that this one is going to result in a quick reciprocation to the downside to continue these trends. And if it doesn't, well, these trends will fail, like here, where it came up and it didn't make it, and then pushed these back up above these, and it didn't work. It actually came back to just about flat to where you entered there. That's all if the market's marking up or marking down in short reciprocations, and that will build the larger term ones, and then the larger term ones will build the even bigger ones after that. To stay good here, like this one had to be strong to push this below, and then this had to be strong to push this below. So that if these are both below still, when this gets back to the top, it's probably a decent time to take a short for the reciprocation down to where they're both, well, to where they're all, because it likes to all get back to the same spot versus all break apart. And all this is predicated on the fact that if this wants to continue to go down, the downward moves on these have to, on average, be stronger than the up moves on these. So if you want a good way to take 50-50 bets, you wait for it to go down, and then you start 50-50 betting on it to go down until it's going up, and then you can start 50-50 betting on it to go up in the same way. And there'll always be one that catches you off guard, but if you're, risking one to make one and you win 2 or 3 for every one you lose when the trend breaks, you'll do alright. It's another way to optimize off this. So you can say sort of here, for instance, the medium term one's kind of at the top, the longer term one's kind of in the middle, and the short term one's at the bottom. So like right here in real time, if you wanted to, you could take a trade. And what we want to do is we want to find that last low down here that broke the bottom, and we can wait, and if this continues to stay nice and bullish, then by the time this gets back up to the top, this should be back at the top here. But that could take a little while, and yeah, we'll see how this works. Paper trading in real time. So we can see it ultimately didn't work, but before it did stop you out, it got back here to the top of the short-term stochastic and gave you an exit. So it reciprocated, just not enough to make you any money. And we can see that trend broke after that, and we're going down. So if you're using this methodology, you'd probably be waiting for this to get back up toward the top, or at least above the midline. Take a short to see if this trend would continue. Anyways, I hope you guys enjoyed that. Thanks for watching. If you like that, you'll like the other ones on my channel, so make sure to check out those as well. And I hope to see you guys around.